what people don't see when they are young is that the needs and the interests change over life. Yeah. And when so you can't wait forever. Yeah? You want to do something at the age of 20, you say, okay, I wait 20 years, but at the age of 40, maybe, or certainly you have other interests. So I think in every phase of a life, one should go for at least have in view all the interests. If possible, also do it. Do what you want to do.
My guest today is Bern Zattler, managing partner of LFS Advisory, founder of microfinance banks around the globe, investor, author, and a long-time board member and leader across Africa. Bern has spent decades at the forefront of building financial institutions that reach millions, navigating crises, driving innovation, and mentoring leaders such as myself. Bern, welcome to the show.
Thank you for giving me this opportunity, Diane.
Thank you. It's really an honor to have you on the show. We've worked together now for almost 5 years. So I thought I would share you with the rest of my community and get to know you a little bit better and get to know the banks that you've built over time. I know you have a PhD in economics, but what drew you to founding microfinance institutions instead of staying in academia or policy or joining politics?
Good question, because almost all my friends after universities try to stay at university and pursue the academic career. I choose another way and try to make a career in the private sector. My first employment was also the first company I applied with. This was Unilever. I think almost everybody knows it. And so they put me into a management track, sitting at the highest building in Hamburg, last floor. People had to show every day that they are very motivated and didn't take the elevator, but stairs, 25 floors.
Oh my God.
They were tired already when they started working. And so I did that.
So they literally took the stairs.
Sorry?
They literally took the stairs going up to 25.
Yeah. Not me, but they recruited people to become senior managers in their companies. Everybody tried to show that they are dynamic and motivated. This was quite a good experience. It allowed me to see a lot of companies. So I had to visit all the subsidiaries in Germany and Northern Europe and look into everything from production to marketing and accounting and controlling and so on. But I knew already at that time, also because of my academic career and the interests that I developed during that time, that I will not stay in the private sector, because helping to make shampoo or ice cream is nice and certainly useful for humans. But I wanted to do something where the value is more visible. And then I joined for 2 years the German Development Agency. This gave me the opportunity to travel to Africa and to Latin America and Asia and to see how these countries develop. But at the end, it was also a bit frustrating because the public sector is not very agile and many of these development projects are not very well structured. So I accepted an offer to advise the Peruvian regulatory banking authority to regulate savings banks. These were one of the first so-called microfinance banks, and they are still among the best performing. When you look at the largest microfinance banks in Latin America, I think like 5 of them are still under the largest 20. So this was really an important experience for me. I saw that and I helped them to develop. And then I got an offer from Inter-American Development Bank to take over the microfinance group there in Washington. This was very well paid. It was really a good offer, but I declined because I wanted to do that myself and to establish a new company. That's what I did. This was LFS. And so there it started. And then this was quite successful and ended with the creation of like 15 banks all around the world.
Thank you so much for sharing your journey. You've spoken a lot about the responsibility of humanity and the environment. I can see why the first opportunity you had with the private sector didn't really fit your soul. You wanted to do more for humanity, which is probably why you went into development finance. Has that been your guiding principle with all the opportunities that you've taken on?
Yeah, surely. Yeah. I was always interested in politics. I studied economics and politics, and I knew I have now kids, and they are they have age where they have to decide what they will do in life. I see that this generation, many people they have difficulties to decide, what to study, what to do. For me, at the age of 15, it was clear that I will study politics in Berlin. Was born in Bavaria, moved to Berlin, and this was my interest. I think from my family and from my history, I like humans and I identify with humanity. It's probably no more very fashionable because everybody now looks at groups and nation is coming back again. But I always felt rather part of humanity as being part of a smaller group or a German or a European. And yes, responsibility is important, not only for the environment, but also for other people. And this probably goes back to my family because I'm the first one who studied in this family. They were all workers and trade unionists organized in the Social Democratic Party. And so their responsibility is important there.
But it's ingrained. It's ingrained.
Yeah, no, this was always certainly important in terms of guidance.
What guidance or advice do you give your children when they come to you? Because I know they're teenagers or young adults, but I'm sure they're trying to find their way in a very different world than when you grew up, right? Cyclical, we're talking a lot about nationalism and not globalization as much anymore, but we still have worldly issues that affect us all, climate change, etc. So what advice do you give them?
I really try to be very prudent when it comes to advice. And everybody has to make his own life. And I really tried hard to ensure that there are some fundamental characteristics are supported, which probably everybody has in itself. Like, for example, not being too anxious and not avoiding risk. If you are interested in something, responsibility. I rarely intervened when they did something wrong, but when they mistreated other people, so then I was quite tough always. And so, I think you can give them some fundamental values and also live them. I think this is for kids, it's the most important thing, not to be there and to say, you have to, and I'm adult and you are a kid and I'm big and you are small and I know you don't know. If you are convinced of certain things, you do it. Children love their parents, and when they see that they do something, they are interested in. When they see that what they do and what they speak, they take it serious. I think you don't have to do more than that. When it comes to specific life situations, I never suggested anything in terms of what they could study or so, even if they came asking me, because that's their decision. But you have to be there to discuss, ask questions. That can help a lot. Instead of giving an answer, you ask questions. And I think it was also, there often saw parallels a bit of kid raising and child raising and how you behave in a company. With colleagues, it's very much the same. You shouldn't always go around and say, I know and you don't know, and you have to do that and don't have to do that. But you share your opinions and everybody has its job and knows responsibility. And then it's his responsibility to implement it or not to do it.
Yes, and I've seen you do that in board meetings. So we'll ask you a question and you'll ask us back It's very interesting. You'll state your opinion, but it's not because it's Bern saying it that therefore we have to do it. It's like a conversation and we all come to the best conclusion. But I like what you've said about your children and values. So you as the parent have to embody the values first and then they emulate because children learn by seeing. And you give them, I think it's the entrepreneur in you, you give them room to fail. They can go make a decision. If it doesn't work, it's okay. They can fail doing it and then they can try again. And I think that's something that a lot of us can take to practice, whether it's if we have children or if we have businesses, that there's always room to fail, take more risks, and start again. So I want to really talk about the beginning of LFS. So you started in 1994 and then later Access Holding in 2006. What was your original vision and did you outlive it? How has it changed since those early days?
That's an interesting question when we think about Africa and businesses in Africa. But I'm just talking about what I experienced. When I founded this company, I wrote down the strategy and principles. This really defined the company because it was specific, it was different to all other companies that I knew at least. For example, this was a consulting company, but we take over responsibility for what we do. Yeah. As a consequence, we offered performance-based contracts. As a consulting company, nobody wants to do that really because you risk something. Consulting companies normally work when they sell work time. They sell consultants or workers. So you pay a salary of 10 and then you earn 12 and 2 is a profit. You don't really take over responsibility, but you also cannot take over responsibility because the 2 would not allow you to compensate somebody. So we said, we want to. This was my experience with the German State Development Agency. We have a lot of consulting projects and very few input. And somebody has to be made responsible for what we do. We want to achieve something. So let's try to measure that and see what we contribute. And so we offered performance-based contracts. We say, for example, you advise a bank to build up a microfinance portfolio. And then you say, okay, so give me 2 years. And in 2 years, we will have 10 million with a portfolio quality of X and a cost contribution or profit of X. If you don't achieve that, you pay us half. If you overachieve it, we pay us 20% more.
Were your clients shocked by this approach?
I think the clients liked it. These were clients in Africa, for example, or in developing countries. But normally you are paid by development agencies. Yeah? So you have to convince them to go this way. So it was a little bit, one had to convince them because it's unusual. But I think we had quite a lot of success. And I think at the end, the partners in the developing countries liked it. And at the end, also the development agencies liked it. Otherwise, we wouldn't have had the success.
Yeah, of course, it benefits everyone. You're building stronger institutions. And then you do well, you get a bonus. I mean, that's how the private sector works. But I understand that it was a different model for consultants, for sure.
Yeah.
I know you've grown the company significantly into thousands of staff, multiple subsidiaries across Africa and really the world. How do you choose which country to go into? Because I know your portfolio goes from Rwanda to, what's the other one? The ones in the Middle East.
Georgia and Tajikistan. Yeah.
How do you choose where to go? What is the commonality?
So we started with a consulting business, and then we studied this performance-based approach led us to the foundation of banks because then you from this to taking over management responsibility and finally investing in banks, we started to found banks. You need money, and then okay. You have to find the investors. You have to find the partners. You have also to see what they like. Maybe they like another country, but overall, let's say we were the strategic investor and Yes, we choose the countries and we do feasibility studies. And we did feasibility studies in many countries, on pre-feasibility studies, probably in 2/3 of the African countries. And there you look at market, the size of the market. In Africa, usually small. So if you want to achieve a certain size, there are not many countries. That's a problem with Africa. The markets are too small. Let's say in most countries, it's just too small. Look at Rwanda, where we are working together. Let's say to go, if the entire financial sector is 500 million, and then the microfinance sector may be 100 million or so, what can you achieve? 100 million for a financial institution on a global scale is ridiculous. Yeah, and so size is very important. Then size is linked to competition. If the competition is weak, you may accept a smaller size. But then also, of course, regulation, central bank, rule of law, governance, corruption, and stuff like that is very important.
I can see why you chose Rwanda as one of your countries, because everything good we have in terms of rule of law, and of course, it's a small market, but I think, we're one of the leaders in microfinance, and that was a strategic decision on your part and others. So I think I can understand why you chose Rwanda. I know in 2021, you decided to step down as CEO of Access Holding, but you're still supervising on the board, especially of Rwanda. How do you choose which boards to stay on?
Oh, that's not really a choice. The owner of this bank is Access Holding. I used to be CEO of Access Holding and the main shareholder. Access Holding at that time was 15 years old. And, after 15 years, normally want to exit, do something else, sell their shares to another investor. In this case, it was clear that the preferred investor would come from Africa. Yeah. Finally, we carved out all the access banks of the global company sitting in Berlin. And these African banks were sold to an African investor. In order to ensure a smooth ownership change, I committed at that time to stay on the board for some time. Yeah. And it will not be forever. This is the case in all the boards where I have been working prior to the ownership change. So I decided to stay in Rwanda.
Yes, you're there for the transitional period. So since leaving as CEO, what's the transition been like for you? What have you been doing? How is life going?
Now we are coming to the nice part of the story. I'm still a managing partner of LFS. I'm sitting on some boards, and I'm also directly engaged in our ventures in the East. This is also shareholder and board work. Me and the other shareholders want to sell also the bank in the East. This keeps me somehow busy to bring it down to the good core. Since 2022, I left all executive positions. And this is a big change because for the first time in my life, I have time. And that's really nice. I was always working quite long, 60, 70 hours during vacation on the weekends. And then with kid raising, so this is to make things even more stressy. And no, I'm really happy that I have more time. And how I use this time is so somehow studying and reading. So I'm publishing mainly not to microfinance, but to what I did during my academic time, more currency systems and global political developments. I recently published an article to the new trade regime and its implications for the US dollar as reserve currency and what that means for the United States and for other regions. That's one thing that I do. And then, I spend quite a lot of time in the mountains. I always liked skiing, but also walking up the mountains in summer, but also in winter with and without skis. And
So you're a hiker.
Yeah.
And I think you said you hike with your wife, with your family, right? Last time I saw you, I think you had mentioned you just come from a trip for how many days? Was it like 4 or 5 days?
Yeah, so with the family, it's rather, we walk, for example, I now came back from England where we did like 200 kilometers along the coast.
Oh, wow.
Yeah.
How long did that take you?
7 days or 8 days. So it's say normally you work 20, 30 kilometers a day. It's not brutal, huh? It's can walk 50, 60, 70. But when I'm with the family, it's like 20, 30 kilometers a day. That's really cool. When I'm alone or with friends, hiking up mountains in winter on glaciers and or in summer, but up to the summit. And so that's more challenging, but not everybody likes it.
You definitely could have walked up the 25 steps, 25 flights of stairs for Unilever for sure. If you're
Yeah, so but I still would take Bruce on the elevator. One looks a bit idiot.
talking about publishing, when I was doing my research, I came across an excerpt that you published in 1998 called The Explanatory Value of Neo-Institutionalism from Development Financing in Intereconomics. I just want to talk about a few things that you discussed. In that paper, you compared three earlier schools: applied growth theory, targeted development financing, and finance theory. Then you critiqued the new institutional economics for focusing too much on microstructures and individual property rights while overlooking macro institutional realities like collective property rights, family businesses, and credit market structures. Looking back to 1998 and everything you've done since, how have those blind spots changed and how are they relative to today?
I think it's still, let's say, it's quite theoretical. Theory means build up a structure that more or less well explains reality. And I think it still explains well reality. It's somehow, when you the core of what is explained in this article is that you can look at one thing from different angles, using different theories. And the mainstream economic theory is the main assumption, behavioral assumption is rationality, individualism, and so on. But you can also look at it from a point of view of a society that is more community based and family plays an important role. Yeah. And then people, for example, looking at cooperative, say from the first point of view, you would say, oh, cooperatives, it has a lot of limitations, because for example, you cannot grow because then you destroy these values, these cooperative values. And then you would look from another point of view with other assumptions and say, okay, but that's maybe the strength of the thing. Because there are these values within the institution, you can more easily trade among the limited number of people. I think this will somehow always been true. I think in the meanwhile, in theory and economics, it has become more mainstream, what I've been saying at that time. But when you look at who won the Nobel Prize in the last 25 years, probably half of these guys and girls were, few girls, I think only one, were institutionalists. Yeah. And so, yes, I think it's still okay. And I think it's also part of the way how I perceive reality.
In 2018, you introduced the GAME framework: grow, acquire, maintain, and exit. Would you say that that's true? That's how you live your business principles. You build it, you grow it, you either acquire it, you maintain it, and then you exit.
No. This game approach, this came up in the last years when it became clear that the initial investors of this holding company wanted to exit, and not because the company is not successful. I think the company was successful, but investors normally want to make liquidity or to divest and invest in something else some after 5 years, some after 10 years, some after 15 years. And then it became clear, so it's time to change the investors and allow some of these investors to get back their money and to invest in something else. And this is the background of the GAME strategy. I personally never thought in those terms. When I invested, I did not really invest to earn money. Oh, okay, I want to live well, and salary and other income is not without meaning. It allows you to live, and you may also see it as a certain recognition of or as a recognition of what you do. But I never did act or let's see, I never really engaged in something only to earn money. And I did not. So when I established this company, and when we run this company, we never thought about exiting. Yeah, let's say the institutional investors, but we and my partners, we never thought about exiting. Yeah, say we receive the salary and maybe even some dividends, and that's fine. You look at the company and it's like a kid. Yeah, you don't exit. So yeah, your benefit as you see the thing growing, you look at the numbers every week, every month, and it's well, okay, you have more clients, maybe you have more profit, your clients are happy also. You see that, and that's good. We never thought about selling. But when the others came up and said, oh, we want to sell, okay, so we have to sell also. We cannot stay alone. Normally, as these companies, then the next step is that the company is taken by one sole investor that may then integrate that into another network. And this is exactly what happened.
I think it would be a good business book to publish. It's a good business strategy book to publish, because especially doing business in Africa, you're either going to sell, you're most likely going to be acquired as opposed to going the IPO route. So I do think that it would be it's an interesting framework. When I came across it, I was like, that's an interesting framework. I wonder, but it did say that you established it between 2018 and 2020. And I know, you've been in business since 2006. So it's lessons learned in business, and I think it would be an interesting read. So that work while in retirement. Happy to participate in that. So digitalization has become essential, and now we're living in a world of AI. How do you see AI or digitalization innovations playing out in microfinance?
I'm quite interested in AI. Even immediately when ChatGPT came up in 2022, I subscribed and I'm using it quite frequently. And by the way, also the Access Holding uses quite some AI systems. So I'm very interested in that, but I have to admit that I looked at that rather to understand what that does with the entire economy and to the world economy and to the European economy. And that's just microfinance. Of course, let's say in banking is prone to be somehow be taken over by AI, or is banking is really something where AI can help a lot. My colleagues in the holding are working on different applications. Most obviously, a loan assessment. Of course, let's say the core of what we do and of our costs, more than in any other bank, because of our clientele, informal clientele. The core of our cost block is the loan assessment, which comes with visits and so on. And so we recently introduced 10 years ago scoring system. Scoring system. You see, with that, you are really very close to an AI application. And then you have to assess how effective these scores are. You put more parameters into the algorithm, and then you use data mining and AI to get better results. And this would allow, if this works well, it could make it significantly cheaper to assess and control these risks. But there are so many other applications. But loan assessment for us, for a microfinance, for a cash flow-based microfinance lender, so not a collateral-based microfinance center, but a cash flow-based microfinance center where information is important. So their loan assessment costs are very important, and this is the area where AI can also be very effective.
To the customer, with AB, we're always trying to modernize our processes and make them faster for the customer. So if the loan assessment, if AI can help with the loan assessment, we can get loans verified faster and approved faster. which would really help the customer. In terms of innovations in microfinance or in the financial sector, I think, we saw that first with fintech and mobile money. I know we use mobile money at AB for disbursements or repayments of loans. So I think, to me, AI is very exciting. I know some people are afraid, but it's very exciting. I think the potential of what it can do, the benefit, hopefully will outweigh some of the negative aspects.
This is a long history where scientifics and other people discussed the advantages and disadvantages of new technologies. Hey, we know that when the cars came, then some changed and people lost work, and the new jobs were created and so on. And when other technologies went on, people said, "Oh, that's very dangerous." And the same is happening now with AI. But this is definitively not to say that AI doesn't come with a risk. Yeah, I think taking new technology is basically neutral. It depends always what people make of this technology. Yeah, but of course, with AI, the possible damages that we do to humanity, also the possible wins, are much higher than in the case of most other technologies that humanity discovered. And therefore, yes, I'm also a bit afraid that this backfires, not only in terms of job losses, but also all the other risks that could really damage people.
Let's pray that the benefits outweigh the risks. I do see value in AI for sure. And I'm just like you, I registered to ChatGPT and I'm doing my own online learning of AI and really just trying to understand it better, because it does go way beyond ChatGPT. Maybe just speaking on the future, what trends do you see, as somebody who has worked in the African continent for quite a number of years, what trends do you see in Africa, in the African markets right now, that excite you the most?
Okay, so it's not with regards to microfinance. I think microfinance has continued digitalization and AI. Again, AI is a big opportunity. I think it really has the potential to significantly change microfinance and to make it better. As to the world and Africa, I think what is more important there is what we are currently seeing in terms of what we are seeing is that globalization is replaced by national interests. Multilateralism is replaced by bilateral agreements. On the other hand, the world becomes more fluid. The information is spread quicker. So I think overall this will make, and for Africa, I think this will also be true, that we see that already, that some companies develop. Yeah. We see some emerging companies in Africa, very interesting, very fast growing, even being competitive on a global size. At the end, what counts is strength of the economy, and I very much hope that Africa will catch up here. Otherwise, there is a risk of losing sovereignty. One can say, since some countries never gain, but I think there is really a risk that other countries only pursue their national interests, and all these multinational concepts, including aid, breaks down, that then in the struggle of one against all the others, some countries will really lose. The way to avoid that is to grow the economy and to strengthen the economy to be able to survive in this war, country against country. And you see that in Europe. Europe has become aware very late that it has to gain its sovereignty by replacing the American military capacities. It costs a lot of money, but without that, it will not be able to take the best decisions for their own continent, for their own countries going forward.
Yeah, I think Africa's economic sovereignty is an interesting topic. From what I witnessed during the process of selling Access Holding Africa portfolio, it seemed intentional to have the buyer be African. You sold it to a West African partner. I found that interesting. I was like, I wonder if it was really intentional, if it was just the best deal on the table. But I think either way, it has worked in Africa's favor that the next partner has that experience and they're bringing a lot to the table. It's an entire Africa portfolio. I think they took, how many did they buy? I think they were like 6 or 7 countries. And they're just going to continue their expansion, and they're also going to continue the expansion of digitalization. I want to talk about the intentionality of that and how that plays to Africa's economic sovereignty, being owned by African companies or African shareholders with an African outlook. Just wanted to speak about the intentionality on the West African partner, new shareholder.
I think the important is it's an African investor. And important is that this investor is not limited to a specific country or even a specific region. It is important for Africa to build continental companies that are present all over Africa that gain size. As I said at the beginning of our discussion, the market of African countries are not small. Most of them are bigger than Germany in surface. And many of them have considerable number of population, but in terms of market, they are really small. As all Madagascar has a product that is not speaking about Berlin or Hamburg, but of a small German city. Yes, it's the national product of all Madagascar. So it's the markets are small, and economies of scale are important. Synergies are important. This comes with size. And I think it is important that it's an investor that has at least the pretension to be present in most of Africa. The investor bought 5 banks in Africa because Tanzania was sold to another investor prior to this transaction. An African investor having plans for all Africa, buying 5 banks, that somehow helps this investor to build this size.
Yeah. I look forward to working with them and seeing the expertise that they bring to the table for the Rwanda subsidiary and beyond. Bern, really, I just want to thank you so much for this conversation today. This podcast really is about people who are contributing to the development of Africa in different ways, right? It's really about builders and builders living fully, because you can't just be one-track minded. You have a family, you enjoy hiking, you have your values that you live by. It all comes full circle and it all plays a role. I just wanted to know, what does living fully mean to you?
To live fully, looking back at the entire life, you mean? Yeah. Mm-hmm. I think that what people don't see when they are young is that the needs and the interests change over life. Yeah. And when you can't wait forever. Yeah? You want to do something at the age of 20, you say, okay, I wait 20 years, but at the age of 40, maybe, or certainly you have other interests. So I think one should, in every phase of a life, one should go for at least have in view all the interests. If possible, also do it. Do what you want to do. And of course, you always have to make compromises. Up to now, and this is what I did, and I have no regrets. And I have the perceptions that I always did what I wanted to do, which doesn't mean that this is something that I would like to do again at my age. I still remember when somebody asked me a similar question 30 or 40 years ago, I said, I want to live different lives in one. And looking back, at least up to now, I think this is what happened.
I love that. Live different lives in one. I love that. So if you had one day to do everything you wanted to do, what would a perfect day look like? What would you do? Who would you do it with? Where would you go?
So again, 10 years ago, it would have been different. Now, my perfect day, I can tell you how my day was today. When I'm not traveling, days look similar. I live in Berlin, but we have a house at the countryside. Oh, so you see a lake. This was my wife, so this was not planned. You see a lake, yeah,
Oh, I
and
see.
so I get up and go for a run like an hour, and then I go to swim for 45 minutes in the lake. And then I do some work on my desk. Then I'm reading mostly scientific papers or books and writing a little bit. And in the evening, yesterday evening, we have been in the cinema. So go to bed at 12. Nice day.
I love this slower living for you. I love this more relaxed version. I'm loving it for you. What's the one thing you hope they remember from this conversation?
I remember.
What do you want the audience to remember from our talk?
I could say, yeah.
I know what I would say. I would say risk is important, and if you take smart risks, the rewards can be really big. I loved what you said, living many lives in one. That was so beautiful, because that's what taking risk is, right? And that's what growing is all about: growing up, growing older, having the benefit of a long life, but a long and fulfilling life is what's important. So do everything you want to do. You have one life.
I agree.
That's what I would say. Thank you so much, Bern, for making the time today, especially while you're on holiday. Please say hello to your wife and the family, and I will see you soon. Thank you so much.
It was very interesting, Diane. We'll meet next week for the board meeting.
Thank you. Bye.
Bye-bye.